This is an explanation of the taxes question on your breakout box, and this is the Kennedy question. So the Kennedy question, it says that Kennedy has a gross income of $95,000. Now, the first thing you're going to do is you're going to subtract off the standard deduction. And I want to make sure that everyone is clear as to why you're subtracting the standard. So, no, you're not going to pull out a real 1040 form for this problem. You're not going to do it, but I just want you guys to see. On the real 1040 form, notice how it says that you have line 11, adjusted gross income. So, hey, I went ahead and put in 95,000. But on the very next line, it says standard deduction or itemized deduction. Well, all of our examples in this breakout box will be a standard deduction. Just a side note, if you have more than what the standard deduction is and you have all the receipts for it and it's all within the tax code, then people are going to take the itemized. But in this particular problem, everyone is taking the standard. Everyone is allowed the standard deduction. So the standard deduction is $12,950 for anyone who is single. In one of the problems in our breakout box, they are married. So for the married couple, you would subtract the $25,900. But this person is single, so therefore I'm taking the standard and I'm subtracting off $12,950 right here. All right, and then when I say 95,000 minus the 12,950, I get $82,050. So that's what I'm doing. And no, you're not pulling out a 1040 for this problem. I just wanted you to see why I'm doing the subtraction, and it's because what's on the 1040 form. So let's go back to our problem here. So Kennedy makes a gross income of $95,000, but I just finished telling you that our first step is to subtract off the standard deduction, and we subtract off that standard deduction, we get $82,050. So now we have to see what tax bracket does $82,050 fall into. Well, $82,050 will fall into the 22% tax bracket. So it's 82,000 is between 41 and 89,000. What we are not doing is taking 22% of 82,000. That is a misconception, because what we're going to do is we're going to take 10% of the first $10,275. Why are we doing that? Because the brackets which you were given, it said anything between $0 and $10,275 gets taxed at 10%. So his first $10,275 is getting taxed at 10%. Now the next bracket has within it $31,500. So therefore, I'm going to tax $31,500 at 12%. And then in my last bracket, okay, if you are going along, the 82,000 fell within here, but you have to ask yourself, wait a minute, I already paid taxes on 10,275, already paid taxes on 31,500. Well, of the 82,000, how much have I not already paid taxes on? And that would be the 40,275. That's the piece that gets taxed at 22%. So then you just do the math for that piece. So you just do 10% of that amount, 12% of 31,500, and 22% of 40,275. And then we add those wonderful totals together. So for Kennedy, you should have $13,668 in taxes. There he goes. So if this is more than he paid the government, then he should be due a refund. If this is less than what he paid the government, he'll be writing the IRS a wonderful check for the difference. So hopefully that is okay for people. So the key thing for all the problems, whatever the gross is, first thing you're going to do is subtract the standard deduction from the gross. The standard deduction is on the Google form. If not, you could just Google what the standard deduction is for 2022, and it's $12,950. And when you get to the married couple, make sure that you subtract off the married couple rate. So hopefully this is okay. And then I'll put in also video links for some that really do a great job of explaining marginal the tax brackets. All right, so Thank you. See ya. Have fun and see you next week.